This week, we think the US dollar can provide some great trading opportunities. So stay tuned to this video to find out why. Hey guys, Arnie here from Forex Source, where we help you to trade and understand the currency markets better. Now on this channel, we do a lot of educational trading content, specializing in fundamental analysis. So if you're new here, definitely consider subscribing. Now, welcome to another week ahead video. This week's video will cover the trading week from the 1st to the 5th of July, 2019. This week we have three very important economic data points which has the potential to offer some great trading opportunities on the US dollar. So let's go straight to the video to find out how you can prepare and possibly trade these events.
Okay, now our main focus point for this week, guys, is a possible trading opportunity on the US dollar. Now, at the June meeting, the FOMC confirmed the market's expectations of possible rate cuts in the near future, with the CME Fed Funds futures now implying a 100% probability of at least a 25 basis point cut in July. Now, last week, Fed members Powell and Bullard interestingly walked back the aggressive market anticipations for a 50 basis points cut in July by saying that they don't really see the case for such an aggressive cut, even though some of the recent data points had very big negative surprises. Now, this week we have three very important risk events that can provide great selling opportunities on the US dollar. We have the ISM Manufacturing PMI due on Monday, the ISM Non-Manufacturing due on Wednesday, and then we have the NFP due on Friday. Now, at the moment, the consensus is for both the manufacturing and the non-manufacturing PMIs to show further decreases this month. Well, the thing is, guys, another negative surprise on either the PMI or the NFP data should only add fuel to the dovish market sentiment on the US dollar, as it pushes forward that likelihood of the Fed for further rate cuts and will increase the market's already dovish sentiment on the dollar. Now, the NFP saw a very low number in May of only 75k, and the March and the April numbers actually saw the largest downward revision since 2010. So it was really a very low number that came in last month. And after May's very big month or very big miss, the market is expecting a rebound of 165k in June. Now, another big surprise this month, guys, will only reinforce the market's expectations of that 50 basis point rate cut again in July, as opposed to the current 25 basis points already priced in. Now, a big positive surprise on any of the important data this week, more so on the jobs report, could also then again dampen that more aggressive expectations. Now, the best way for us to trade these data points this week, guys, is to wait for big possible negative surprises, which could provide opportunities for us to sell the dollar at market. Alternatively, if we get big positive surprises in the data, that could provide us with an opportunity to sell the dollar at better levels after we've had some decent rallies. Now, one thing to be very careful about this week, guys, is risk sentiment. As you guys know, we had the G20 this weekend, where Trump and Xi decided to restart trade discussions. The US basically agreed to no additional tariffs on Chinese goods, and also allowed Huawei to purchase equipment on from US companies again. So this outcome of the meeting is fairly in line with what the markets were anticipating or expecting. So there's really no way of us knowing how the markets will react to this news. So we'll need to pay attention on Monday to see how the markets open and how the markets take this news. Bottom line for us, though, is to carefully assess the risk sentiment in the market before we place any trades this week. Okay, guys, so now that we understand the fundamental reasons for why we are going to look at the US dollar this week, we can move on to the charts and look at the technicals. In the event that we see any negative surprises on the US data this week, we can look to pair the US dollar with something like the Canadian dollar, which has remained well supported recently due to some good economic data points, as well as recovery in oil prices. Now, if we just quickly move on to the charts, guys, and looking at the USDCAD, we can see that the pair has basically been free falling for over 370 pips following the Fed's June meeting. Now, ideally, we don't really want to be selling the pair here right down at the lows. So we'd prefer to look for some sort of a pullback before taking a short entry on this pair. Now, if we just draw in our Fibonacci retracement from the daily swing high to this daily swing low over here, we can see that we do have confluence with a 38.2% fib as well as that 132 price handle, and we also have confluence with that 50% fib as well as this recent support area, which also comes in very close to that 132.50 handle. Now, any pullback into this overall area that we have over here, guys, does look like the ideal place to look for a possible short on the USDCAD. Now, in terms of a stop loss, the safest place really to have our stop loss would be above this daily swing, which would be just below that 134.50 level. But at over 200 pips away, it may require us to use a smaller position size to keep the risk controlled. Now, if our Fibonacci expansion, if we use our Fibonacci expansion and we just measure a pullback into the selling zone, then we can look to target something close to that 100% fib expansion, which is also close to that 129 level, as well as this cluster of support that we can see on the daily chart. Now, guys, just on a side note, make sure to keep track of any drastic moves in oil prices with the OPEC meeting scheduled this week as well, as that can have a big impact on the Canadian dollar.
Guys, thanks for watching this video. These videos are designed to help you think and approach the markets like a professional trader. Guys, always remember that you never need to fear the red risk events in the markets like this week's important US data, as they can be some of the best opportunities to trade the FX markets. Guys, also remember that these trade ideas are reliant on the incoming data we receive on a daily basis, which can change from day to day and from session to session. So make sure to pay close attention to that market moving news as they come through on your news feed on a daily basis. We wish every one of you a profitable trading week ahead. Until next week, guys. Cheers.